Hey everybody, another week, more fun. Welcome back to the Agent Boost podcast. This week we're excited to have a really special guest, Sheila Pryor, and I'll pass it over to you, Sheila. Go ahead and give an intro.
Yeah, she just told you your title. Let's see if you can remember. Lead distribution.
I'm passing to
lead broker distribution manager for the Mountain region.
There we go.
That's why
I have a lot of other jobs too, but that's my main job.
Yeah, we were just talking about your tenure with Cigna. So tell us a little bit about, your background, your history, origin story, how you grew up, all that, and how you got into this wild insurance industry game.
So I'm originally from Phoenix, Arizona. I live there now. I've lived there almost my whole life. I have been with Cigna collectively for 14 years. Started my career on the commercial group side, managing accounts and through the sales distribution channel. And then I moved halfway through that into life and disability account management and sales. So I've done two different lines of business. I then left Cigna for about 4 years, worked for a couple different companies, and came back into individual and family. So I'm a boomerang, if you will.
Yeah, there you go.
Did you ever work on the distribution side or mostly carrier when you left?
All carrier.
Okay.
Yeah,
Fantastic.
So my whole career on the carrier side. I did not want to grow up to be in insurance, like most of us don't aspire to be that.
Well, we were just talking about how you get to golf a lot though now, so that
Correct.
That's kind of goes insurance and golf goes hand in hand. So there's
a lot of deals
benefit.
get done on the golf course.
It's true.
Not gonna lie.
Yep.
A lot of venues.
Yeah. How I ended up at Cigna, honestly, is I have a very close family friend. I've known her since I was 4 or 5 years old. She's been with Cigna. Actually, this year will be her 42nd year with the company. Whoa. And so she kind of nudged me one day and said, "Are you ready to finally explore working with Cigna?" And I was like, I think I'm ready now. And at the time, I was actually working for a company that did third-party claim repricing. So I was already in the industry. I just hadn't made that leap yet. So she was a big motivator for me, and she's been a huge mentor for me through my career. So that's really the reason why I ended up at Cigna.
Yeah, and one thing I'll add before you chime in, I was going to say, I think just with your years of experience in industry as well, you were in it prior to the Affordable Care Act, and so you have a kind of a different lens or view on the industry that maybe a lot of people don't as well. Yeah. So I think that's going to be
I feel really fortunate for that because I did work with the people that sold individual with Cigna before ACA rolled out. And a lot of them are still with the company, but the ones that were not were so well respected in the industry. They just knew how to do their job. They satisfied a need within, the ecosystem. And so I've watched it kind of, the evolution of it happen too. And quite frankly, the reason why I actually moved from group distribution into life and disability was around the time that ACA hit. There was so much pressure with, scrubbing SBCs and doing all of this infrastructure build to satisfy the requirements that I was like, I think it's time. Is there an opportunity for me to do something else? And so the opportunity did present itself. But I ironically was on the scrub team for the first round of SBCs because I'm kind of detail oriented. And so I remember with a red pen literally going, that's not right, that's not right, that's not right.
So dig deeper.
That.
SBCs, like the acronym for listeners.
Summary benefit descriptions.
It's we all get into the jargon and we talk a lot, and we always listen our listeners about, hey, I'll get on a talk track and start talking, what do we call them, like DMIs or like RFIs or whatever, and then it's like, oh yeah, let me give a description of what that actually is.
My wife will tell me she tried to listen to the podcast and then she's like, and then I just had to tune out because you were
too many words.
I didn't know what you were talking about, and it was super boring for me, honestly. And I'm like, yeah, it's not meant for you. It's
You're not the audience.
Yeah, you're not the audience.
So it's ironic because back in probably 2010, Cigna did a whole focus for not just sales teams, but the whole organization about the words we use to basically pull back and not use any acronyms. And I try to really catch myself to spell out explanation of benefits or summary plan description or whatever you're trying to actually convey, because the normal person doesn't have a clue what you're talking about.
Correct.
Yeah, I guarantee there's not a more acronym-heavy industry than our industry, for sure.
Yeah, it's ugly.
Yeah, it's getting bad. So why don't you kind of tell us a little bit about, maybe we should talk a little bit about the state of ACA right now. I think that's really what a lot of is on brokers' minds is, it's May 30th, 2024, and we're kind of going through an evolution in the ACA side, just like we are on the Medicare side. And so maybe talk to us about what you're currently dealing with and what you're helping brokers with at this current time and on the ACA side.
Yeah. I mean, the landscape has changed a lot even in the last 2 years, right?
Mm-hmm.
If you look at CMS numbers, not only explosive growth in the number of membership, but also the broker distribution has skyrocketed. It went from 30-ish% in 2022 to upwards of 70 today, right? So you've seen way more people understand the opportunity and get into the space that didn't get into it before.
When you say 30 and 70%, what is that?
The sales
that are broker assisted enrollments.
Yep. Enrollments. And I would say like we're part of that, right? Like our organization too. And that, but I would say a lot of that though is that for many years, and just talking about the state of ACA, right, wasn't sustainable. At least me as a business owner, I was looking at post Affordable Care Act and seeing the co-ops and a lot of the failures and carriers not paying commissions. And it was almost like for a lot of years, it seemed that it wasn't profitable and the carriers were really struggling with managing that. And so it didn't seem like a great investable line of business for a lot of business owners. And it just seems like that dynamic has changed. So sorry to derail you, but yeah, that's what I was alluding to. And that's probably a lot of why you're seeing such a big jump as well. Part of it.
Because I think the first 10 years, honestly, were really hard, right? A lot of lessons learned. You said it. A lot of carriers couldn't afford to pay commissions. A lot of carriers had to exit the space because they couldn't manage the product. And now you've seen this resurgence. So a lot of lessons, I think, were learned. But I do think that carriers will still continue to feel pressure in this space because of the dynamics of what we're up against in the regulatory environment, right? Risk adjustment, MLR, competition, trying to pay brokers fairly, all of the fraud that we're experiencing. It really puts a lot of pressure on not just operations, but on the actuarial component of it, and trying to really make sure that we can be consistent in rating structure and keep the members that we have. New members are great, but existing members are better.
Yep.
Mm-hmm. Yeah, and talk to a little bit if you could, because you're definitely a lot more knowledgeable about the reserve pools and how that works, and what a lot of brokers don't understand who listen to our podcast. They think that, hey, when a competitor or a carrier or a payer, however we want to describe them, when they pull out of a market, they go, oh, this is great for all the other carriers because now you have less competition. This is excellent, right? Now you're just going to have less competition. It's great, but not always the case because of the reserve pools, correct?
Right. Yeah, so basically how the risk adjustment process works is we as insurers report back all of our data to CMS about how we've coded our population. Are they healthy? Are they risky? Are they chronic? Are they catastrophic? And a lot of that comes from the codes that are received from hospitalization, but it also comes from health risk assessments and primary care visits and identification of diabetes and chronic conditions specifically. Right. But when we get all that information back to CMS, they look at all the issuers and they go, okay, Cigna, you have a really sick population. United, you have a really healthy population. Mm-hmm. Well, you, Cigna, are in a receivable position because you have too many sick members. And United, you're in a payable position because you have too many healthy members. So those two buckets go into the pool, and then the money is allocated back to the distribution of the risk. And I think that that's something that's really important as brokers and agents are living in this world, because you can ask me for things all day. You can ask me for network. You can ask me for product tweaks. You can ask me for all of this stuff. But at the end of the day, that is what matters to us, apart from, of course, profitability and loss ratios and all of that other stuff. But that's what's important, is we need to know our members. And that's the expectation, is that we know our members.
Yep. And when a payer in a marketplace, for example, like in a particular state, let's say they really do go under, right? Like we're not to, like I think we could talk about Bright and some of the challenges and some other carriers that have experienced that. When they remove products from the marketplace, then the remaining carriers also have to chip in more funds into the reserve pool to offset that as well, correct?
Yes. Or in Bright's case specifically, it was basically written off because they didn't have the funds to contribute.
Yep.
And so then we all are absorbing something that we expected to get into our pocket potentially. Mm-hmm. So, right, it makes it really difficult to hold rates and keep the ship moving when you expect to potentially get money and now you don't.
Millions or hundreds of millions can't go into product. It has to go back into ensuring that it is a healthy marketplace, that it's sustainable.
So to that point, what could brokers do to help Cigna with that, as far as knowing their members and knowing their population? How can brokers help with that problem?
Encouraging well visits, encouraging health assessments. If they go to the doctor and, something happens, some of it is on the provider side too, right? Our provider contracts, we have to leverage some value-based and risk-based contracts to hold them accountable for getting us the data that we need. Right. But ultimately from the, trusted advisor's lens, just making sure that your members know it's okay to go to the doctor. Right. We need people to go to the doctor.
Well, and we all have clients where you sit down with them and like, I don't want the stupid insurance companies calling me. They want me to go see the doctor and blah, 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 blah. And that's on the Medicare side and the ACA side of things. And it does help when you have the broker take a minute and say, hey, well, let me just explain to you why that's important and why it matters and ultimately how it's going to benefit you. And then they kind of understand that versus they think they're trying to be annoyed so they can go make money off them, or something like that.
Right. So in our training today, I showed the resources that we've built to help put that message from the broker's lens, because we know they don't read our mail. You just said it point blank, right? They either throw it away or they're irritated because we reached out to them. And so we're trying to put the tools in the broker's hands to help us just, accentuate what we're already doing, because they are the trusted advisor. They're going to be the one who the clients are going to listen to when you ask them to go to the doctor for their PCP visit, primary care visit, or their well visit, and maybe they could get $100 reward out of it. Why wouldn't you do that?
Yeah.
Right. There's no negative on the other side of that.
Right.
I know that people perceive that to be, but there's really not.
The only negative is their time that they don't want to do.
Yeah.
Right. Yeah. And getting that risk adjustment factor coded properly on there for the higher compensation is what's going to kind of, from the broker perspective, you're educating your client and saying, hey, this is why. And what will happen is, let's say you're diabetic, they code it properly, or X or Y or Z. You have heart conditions, they're going to code it. And then therefore they're going to get more funding, and then it's going to be able to provide you with not only a sustainable plan so that next year you don't have your benefits increase, right?
Right.
Or experience, a carrier that's unsustainable that pulls out of the marketplace. That's why you need to go do this.
Yeah.
Right.
And we all, I think, and I think I would say this for anybody on the insurer side, our objective is to have a healthy makeup of all of those risk pools, right? We don't want just healthy or just chronic or just catastrophic. We need a healthy mix of all of that. But the really pivotal thing, especially with the chronic people, is that they're managed. Mm-hmm. The danger zone is the chronic that are unmanaged, and also an overly abundant population of healthy unengaged, because those 80% will become the 20% catastrophic, without a doubt. You go back to consumer-driven health plans 15 years ago, and that's exactly what their metric was that they always used about why you put consumerism in the hands of the insured, because it's their job to make sure they're getting the care that they need and empowering them to make the right decisions.
Interesting. What else are you having conversations with brokers about, as far as the current state of the ACA? What are some of the things that Cigna's working on, or that are on the top of brokers' mind? We have a whole bunch that we could throw out there.
We're going to start topic by topic here.
Yeah. So from a product design perspective, we're trying to really build copay heavy products. We know those work in the marketplace. In most of the markets where we have products, we're filed HMO or an EPO by design. PPOs are really expensive to manage in this space. I alluded to it before. You can ask me for network all day, but if you want the price to stay consistent, we probably have to have a leaner network, and that's okay. We don't all need to be all things to all people. We need to be the right things to the right people so that we have that right mix. And then really trying to make sure that our processes and our operations align with protecting the brokers and their books of business. We're firm believers in that. We know that there's a lot going on right now.
We appreciate that, and I really mean that. Thank you.
We definitely, you guys are very important to our distribution channel. Similar story to what I said before, went from 30 to 70. Cigna is an equally similar story. We didn't have the broker channel distribution percentage that we do now. And so it's really important for us to, we see you and view you as partners, and we can't do this without that partnership. And so that works both ways. And so we're really trying to make sure that we take the appropriate steps to make sure that the books are protected and that we're doing right by you guys.
Yeah, and I would do that as a quick shout out too. We like to give credit where credit's due. We have a lot of partners and carriers, and we do lots of lines of business. We do Medicare, we do ACA, life and annuity. I mean, so we work with a portfolio of around 100 different carriers. And like I said, we know from a partner perspective that carriers always have their weaknesses and their strengths, but props, and I want to give shout out to Cigna, at least on the ACA side, for doing that and recognizing and valuing the distribution partnership. We really do appreciate that. And same thing, shout out on the Medicare side. They were one of the first to, even though it didn't have a lot of teeth and specifics behind it, with a lot of even the CMS regulations going on right now, they were one of the first to the marketplace to come out and put something in writing to say, hey, even though we don't have like the specifics, we're committed to the partnership. We're going to continue to work with distribution in whatever we can from a legal perspective. We're going to follow the CMS guidelines, but you have our commitment. And I think that matters a lot to brokers and to distribution who are listening. So kudos to Cigna.
Yeah. Thank you.
That's great.
Yeah, absolutely. So what else is going on in the current state of ACA that's causing challenges for brokers or for Cigna? Or what are some opportunity zones?
Well, I mean, we can talk about the fraud. I mean, there's plan switching that's happening. There's luring customers fraudulently into $0 plans, or that they're being paid for
$5,000 get your card, your $4,800
benefits, like the lead generators on like you could be missing out, and it's like I think it was like the Eskimos or Inuits that qualify for some weird carve out.
Their own subsidy. Yeah.
And they're advertising that broadly, similar to the Medicare Advantage with like a buyback plan that they advertise nationwide. And they're doing the same thing in the ACA space. It seems like a lot of lead generators are advertising that particular benefit, that maybe 0.25% of the population would qualify for.
Yeah.
But it's like a very big bait switch strategy right now. We're seeing that.
A tax credit or a cost share reduction are vastly different than a $1,400 payout.
Correct. Mm-hmm. That they think is going to get deposited into their bank account.
Right.
Yep.
Right.
So what are some of the things that Cigna's...
Yeah, before there, I would say we should maybe talk about more specifically the things that I think and observe that Cigna's been in the space for a longer period of time than a lot of the other insurers in the ACA side, which I think gives you definitely some advantages in that you have that experience and you've been able to really procure and enhance some of your processes. So I would want to talk about maybe like the onboarding process, how it's maybe a little bit smoother. We see that it's smoother than other carriers, as well as... the portals and systems with Cigna, and then just the approach to the market. I think those would be important to cover, for listeners.
Yeah. So our onboarding process is simple for a lot of reasons, because our philosophy is that we contract in the resident state, and once business is in hand, we will appoint in the state in which business was written. That is a philosophy that was taken from the group side. So that is a similar philosophy that we've adopted on the ACA side. That is good for a lot of reasons, right? We're not spending a lot of man hours doing a bunch of work on the front end to expect that somebody's going to sell policies and then they don't.
Like 80% of the time?
Yeah. Mm-hmm. And also, in the states where we have to then pay licensing fees, that saves us appointment fees as well. The nice thing about our onboarding process is, and it's a little bit of a negative right now from just a commission payable perspective, but if somebody's under an agency, they are appointed as an independent writing agent and then aligned underneath the agency.
Sure.
So not in like a traditional FMO or upline hierarchical structure, but it allows us to be a little bit more strategic about how we protect the books of business as well, right? Because we don't, in theory, want a release from someone, but if an agent wants to go from one agency to another, we will allow them to do that if they do the appropriate paperwork. But until such a time as somebody tells us, we want you to move this book of business from entity A to entity B, it will stay exactly where it is. Yeah. Until somebody tells us what to do.
And I think that's key. And I'm glad, and that's why I wanted to have a conversation and really bring awareness to that, because that is not a process of a lot of other carriers. And like I can speak to at least our organization specifically, we're in growth mode and we're onboarding a lot of, new brokers and NPNs and agencies. And as we're doing that, there may be writing business with other carriers that are very prohibitive, that they can't move, they can't realign and can't choose and say, hey, this particular organization is supporting me and this is how I'm growing my business and I want to align there. They're not able to do that or move their book of business or have that flexibility. And I think that you guys have solved that and done a good job with it.
Yeah, because we believe that the person who's writing that business is the one who, they're the ones that wrote the business, right? it's not that you guys didn't give them all the support and the intel that they needed to be able to do their job well and to sell those customers. But at the end of the day, they were the ones that worked hard for that, right? And why should we punish them because of a bureaucratic
indentured servants, I always call it, like indentured servitude, that you're just stuck. You were tricked to stay somewhere, and now you're just stuck there forever. Yeah. I mean, there's some really bad processes like that out there that exist in the industry. And we always err on the side of, you know, kind of freedom and choice, and brokers being able to, and it cuts both ways, you know, but candidly, we feel that, like, for the most part, brokers should be able to go to where they feel like they're going to be best supported and where they're going to have the most opportunity to grow their business, right?
And we
best
feel the
serve their
same.
clients. Yeah. So we really like that kind of healthy approach. And I can't say that, you know, policies are always in place from carriers to kind of promote that kind of behavior.
Yeah.
So I think that's important.
So go a little bit, clarify that a little bit. What specifically is Cigna's process right now? For example, if a broker does want to leave a current upline and move over to a broker, you know, an upline like us, what is the process specifically?
So we'll basically do an agency transfer, right? We'll transfer them from one entity to the other. And if they ask us to move the book, we will ask the agency for a release.
The legacy book of business?
Yeah.
And
so it's basically, if it were your agency, it's your call whether or not you want to release the book. Yeah. It's not up to us.
Yeah.
Right.
We'll do it based on what we're told.
Yeah. So
I would guess most agencies opt to not move the book of business.
There are some that do not release the book. Yeah.
And let's talk about that. So that's why it's important for agents who are listening to this to understand. Now, candidly, if you're an employee somewhere and you're on payroll and you're working for somebody selling policies, you probably need to understand that those aren't your policies, that you're an employee, and that it's not your book of business. So when you leave and go somewhere else, you should not have the expectation that those are your clients and that you're taking them with you.
Right.
However, if you're an independent agent and you're working with an agency and you decide to move somewhere else, you should probably be having those discussions in advance with your current agency and what that looks like and what that flexibility is. And do you have the ability to move that or go somewhere else and transfer that book of business if you choose to go elsewhere? I think those are really important conversations for brokers to be having with their agencies.
Yeah. And I think it's important for them to know what the carrier's rules are, right? We're all different. We all do things different. I don't want to say that one way is right or one way is wrong, but we're all going to operate based on what we know best about our business.
Yep. No, and I think one other thing that we should, so again, I like the onboarding process, I think makes sense. I like the fact that you do put measures in place to protect books of business and allow movement in the space. And the other thing I think we should talk about is the AOR process and how, you know, one thing that we've experienced is a lot of pain with other carriers and just the massive amounts of AORs that are occurring. And it's not necessarily the same with Cigna. So talk to us a little bit about the AOR process and how you do it and how that's maybe different from other carriers.
So essentially, we will not move an AOR unless we are instructed to do so by the agent of record with a sign-off from the client. End of story.
Wet signature or document?
Wet signature. It's an electronic fillable document. If an agent doesn't have that fillable form that has a client signature on the bottom, if we do get an agent of record form, our team will reach out to the client and validate that change. We will not do anything without a validation from the customer to move that agent of record.
And they reach out telephonically, or how do they reach out?
They can call telephonically. They can send the form digitally via email to our sales team, our broker channel support team, to my team. There's any number of ways, but it is going to be validated before we make a change.
See, and I'm actually going to raise that, and again, insert and say, good job. I appreciate that, Cigna, because there's other carriers that don't have that separate form or process, an AOR form, any sort of second step verification from the consumer, anything. And so what we've seen in mass with other products and carriers is that, you know, you're doing all this work and maybe you're using Health Sherpa or other, you know, Quota, whatever platform you're using, they're writing business. And then, you know, other brokers get consent leads or they just go in the information and commit fraud. They see the name, state, date of birth, and they're like, yep, that's mine. And they just click and make themselves the agent of record, attach it to it, and they essentially just steal the policy en masse or create bots, or they create other technology to go steal en masse, which is really theft and fraud. Mm-hmm. And I think that by you all putting that step in place, to the brokers listening, are you bothered or perturbed every once in a while that it's a pain or an extra step? Sure. But in the grand scheme of things, I think that just makes sense.
And I would also say, as much as we value your partnerships, right? Brokers are our bread and butter at this point. These are still individual policies at the end of the day.
Correct.
Yes, brokers are assisting in getting people enrolled and helping be their trusted advisor, but these are individuals who purchase these policies, and so we have to protect them too, which is why we want that client sign off and acknowledgement that, yeah, this is my new broker, or no, I don't know who that guy is.
Exactly. And I think that's so important. And we've seen so often people who they don't even know what plan they're on. They don't even know who their insurer is. Suddenly they thought they had one insurance plan and they're going to Access Care and it's been 3 months and they're like, surprise, you don't even have that insurance plan.
Yeah.
You know what I mean?
Yeah.
Or who's my agent of record? No, I don't even know who that is or what that entity is. And
and the consumer gets caught in the crosshairs of that, right? If you have somebody going through cancer treatment and somebody swipes their coverage and changes their plan on them,
that doesn't happen. Oh, wait.
Could.
Yeah. It happens all the time, right? We're hearing horror stories of that all the time.
Yeah. And I think, from my tenure in this industry, I always have tried to put myself on the other end of the policy, right? And there's another person on the other end who's going through something that you and I will never understand, right? Yeah. And just because of the simple greed of one person to put them in a windfall situation where they could rack up, tons of debt and end up in bankruptcy through no fault of their own is not what any of us should be after at this point.
Right. And same thing. I like it when the private marketplace, when we come up with solutions, when brokers and distribution, when we're talking to carriers or payers and we're having a discussion, and I like that you've put those processes in place, because if we can control the controllables, right? If we all can implement guidelines and protocols to curb or prevent a lot of the fraud and the problems within the industry, it doesn't bubble up and get to where Health and Human Services or CMS is going to be like, oh, it's now on our plate. This is ours, and we're gonna.
Please, hell no! Please let us solve this before they step in, because we cannot.
Right. When we finally have to escalate it and turn to government to come up with the solutions, they're not always going to be the right.
Ain't
solutions.
Nobody going to be happy.
And I don't think there's winners in a lot of that, right?
Yeah.
Yep.
So I think that's the one thing that I continue to say to all of our carrier partners too is please, please, please let's. And I'm a sales organization. We want to sell in mass.
Sure.
But at the end of the day, you can't do it unethically, and you can't do it at the cost of the consumer, and we have to implement policies that make sense for the industry. So.
Do all brokers have to go through ethics training every year? Because I sure do.
Mm-hmm. Yeah, they do. And that's one thing that, we hammer home all the time with our agents and training and stuff. And we say, look, if you didn't know it, you're a licensed professional. You're an accredited entity like with the state. You have a fiduciary duty to your clients to always do what's right for them, and that's our guiding principle. Is we're always coaching brokers and agents, hey, always do what's right for the consumer no matter what. If that ends up in you not, being the agent of record or transacting something, then that's what we're going to do, because long term that's going to win out. And it's interesting because I know there are some solutions with some of the enrollment platforms like Health Sherpa, et cetera, and there's some ideas of like simple solutions like 2FA, two-factor authentication, sure, or like verification. Hey, are you actually wanting to change this agent of record? Are you actually wanting to allow this individual to be your rep? I mean, go figure. Those are pretty, basic level concepts here that I think the free market should be able to solve, to Dan's point, before we ask, or it gets bad enough that regulators, because who looks like the bad guy in the end that we're seeing on the Medicare side of things? The independent agent, the broker, are the ones that get pointed as the villain, when more often than not, we're the trusted advisors. You have it's a classic case of a couple of bad actors or massive entities that we've talked about, offline, causing a lot of this chaos. And then the good, local field agent that really is acting like a fiduciary and understands these plans and these markets and is connecting, a consumer with a needed plan, they end up being the ones that are pointed as the bad guy.
Poop rolls downhill.
Well, that's a really good example of what happened just recently. CMS released a press release basically pointing the finger at agents and brokers, to your point, independent agents and brokers. And a plug for NABIP, they stepped in and said, hey, this doesn't make sense. You need to retract your statement. And if you don't, we're going to issue a counter release. And they did. Because they also believe that we need to protect the agents and brokers, because we do know that there's some bad actors out there that are going to poison the well for everybody. And that's not what anybody wants.
Yep. Yeah, I appreciate that. And same thing with NABIB. They're fighting the fight. Like, and I've actually been critical of them in the past with NAHU, and they changed to NABIB, and I felt like they didn't have enough, teeth behind some of the things that they were doing. But I will say in the last year, it feels like they very much stepped up their efforts to be out in front of a lot of these changes. And so
there's a lot of change going on. I'm the state chapter president for Arizona, and I'm also the marketing and communication chair for the National Association. So I'm very plugged in.
Yes, well, and we like that they're now getting a little bit more. Seems like a little bit more grit, a little more, digging in their heels a little bit more, which I really like.
But to your point with NABIB, and like Dan and I talk about, we're just fighting wars on every
10
front,
fronts, yeah,
all day, every day.
Yeah.
And so there's so much right now between ACA and Medicare that NABIB and all these other, advocacy groups are working towards, that it does feel like we're fighting wars on all fronts, advocating for our own existence to some extent.
Yeah. And there is a lot of work being done to partner with a lot of the different coalitions, right? Because everybody has their own avenue in, or their own slightly different agenda. So kind of pulling all those people to the table together, I think, is going to be really powerful. And I think we're on the precipice of something really great with the association.
I agree. And I actually think that it's great to talk about it. I did a post today on LinkedIn about the chaos. And I always think that, we can look at all the doom and gloom and all the problems and everything going on, even as we're talking about processes and fraud and everything else. But if you look at it from the perspective of the chaos, it presents opportunity. And the people who understand that, if you can navigate it well, there's always going to be winners and losers. But I think that, to your point, the state that we're in right now of all these challenges, I think they are going to be solved. I think they're going to have good solutions. And I think that when we come out the other side of it in the next, I want to say realistically 2 to 3 years, I think it's going to be a great marketplace,
I do too.
In the near future.
Yeah.
So
I think there's a lot of exciting stuff getting ready to happen.
Yeah. So kind of getting back to Cigna, talk to us about the approach to benefit design, how you guys are maybe a little bit different from some of your competitors in the space, how you guys think about logic in approaching states or marketplaces that you enter, what you can share about bid process or how you create them, and when brokers are aware or no, on the day before open enrollment, or talk to us a little bit more about that.
Yeah. So from a product design perspective, I think you said it, we've been in the industry a long, long time, right? And we've taken a lot of learnings from what we do really well, which is on the commercial group front. And we've translated a lot of that to the way that we build product on the ACA side. If you look at just very high level across the country, and every market has some variations of it, but you're going to see very copay heavy plans. By design, we know copays work, consumers understand them. Having to sift through deductible coinsurance is a nightmare. We can't expect consumers to understand how that factors into contracted weight with a provider. And
it's uncertain.
It is completely uncertain. And so you'll see that, trying to make it really, really easy for consumers to use their plan. Back to our earlier comments about getting their PCP visit, filling their medications. Nobody needs to be afraid to fill their medication or go to the doctor or call for an urgent care visit, and even static costs on emergency room. One of the things that I think I've combated for a lot of years with agents is, why are you selling a system? Mm-hmm. And what's the logic behind it? If you can explain it to me and if you can justify it to me, then by all means, go for it. But we are required by ACA to cover the 10 essential health benefits, and one of those is emergency care.
Right.
And that access point is regardless of where that access point is. And
Correct.
It's processed in-network with the same cost share regardless of where you seek treatment. So I think that's a really helpful tip for agents, too, that listen. If you're selling the system, it better be because there's a specialist attached or there's some kind of need why that person needs it.
Routine service only access there. Yeah. What's usually the response from a broker? It's just brand awareness.
The member asked me. It's in their neighborhood.
Well, that's when you push back to the broker and say, but it's your job to educate, right?
Yeah.
I mean, I would imagine that should be the response. That you should be well educated and push back and ask and dig and ask that second question as to, okay, you mentioned that why is it important, and then kind of educate them.
Yeah. Yeah.
So
I think those are things that just get, kind of tossed out with the bathwater. We've done it that way for so long, but people kind of forget it. Consumers don't know it, right? Because that's not intimately what they're searching for when they're looking for an insurance policy. But it's our job to remind them that it's okay if they need to go for emergency care.
Correct. And I think that's crucial too. Like when you talk about why are you selling a system is, access to care is a really big problem for most states and most areas across
major
the country,
metros,
especially major metros. And that's one of the things is I think agents, I still have this, that have been in the industry a long time, have an antiquated idea, or they've romanticized this idea of these massive networks of being able to go wherever you want, whenever you want. And for most people, they just want to get good quality care, and the majority of what they care about is emergency and urgent care.
Yeah.
And so I think that's a good reminder for all you agents out there. Why are you selling that system?
Yeah. And, some systems are more costly than others, right?
Yes.
Some systems don't want to be contracted alongside another hospital system. And so, when it comes to access to care, we have to build a network that satisfies that. Yep. End of story.
Yeah. Or if it's,
they all have network adequacy, right?
Yeah. Or if it's a teaching hospital, or, there's other factors that go into that. And you have to understand there's going to be a sacrifice. If you're asking the carrier to contract with that health system, you're going to have to sacrifice copays and benefits.
Yeah.
Which.
And that's the other thing that we evaluate every year as we go through the product design process, which starts as soon as open enrollment begins for the following year, right? We in the ACA space live in the past, the present, and the future all at the same time. So we're doing this weird look back, look forward, live in the moment, look back, look forward, live in the moment.
And
we hear that.
And surprise the government, we're going to claw back some of those payments from a year or two ago too.
Yeah. Right.
And, and that too. But I would also say, while we're on the topic too, just for brokers listening, the idea of 10 years ago too, of having, and whether the agents sell ACA plans, whether they sell Medicare, whether they sell both, the idea of having a health plan that's HMO or a PPO plan, but is going to encompass the whole entire network of all the doctors and hospitals and health systems, and have these extremely low and competitive co-payments and everything else is just not, it's just not viable. It's just not going to exist.
It's not sustainable.
And it is not. And the more and more we look forward to these, we're going to see healthcare and systems, and we haven't even had an episode yet talking about like the risk sharing to providers and what I think is going to be a catastrophe.
I'm presenting that in Colorado in 2 weeks.
Are you?
See, we're on the same page.
Share us your notes.
The shared risk that they've taken on, is going to mount over the next year or two. And I think that's going to be a whole nother consolidation that we're going to see in the next year or two. So when you start to look at all these, I'm trying to educate brokers to say, you just are not going to find the silver bullet plan that is like a one size fits all, that you're going to have this one carrier and product and you're going to sell it to everybody. It just doesn't exist. You have to be a good broker who understands, who has a broad portfolio, who does a great needs analysis, and is putting that particular client or customer on the right plan.
Yeah. Well, and let's be honest, unless you're 55 plus, you don't remember the days of the traditional HMO model, right? The gatekeep, all of that.
Yeah.
We're going back to that, but I don't think it's a negative thing because it did work back then. But the difference is that back then people didn't have choice, and now we're building this society of consumers of insurance versus utilizers of insurance. And I think that now is the time for us to revert. It's not going to go totally back the way that it was, but I do think that it's going to trend back to the way it was.
Well, because cost containment, right? And part of it is it's just so hard right now.
It's interesting that you mentioned that, because I was just I was listening, I think it was Patrick Bet-David's podcast, where they were talking about that movie John Q. With Denzel Washington, and it was,
I didn't see it.
Yeah, where he has an HMO plan and his son needs a heart transplant, and the evil insurance company won't approve his son's heart transplant, so he takes the hospital hostage, and it was like they were talking about the link to, that was when Obamacare was first, the ACA was first getting enacted, and it was this.
It's the Affordable Care Act, Mike. Come on.
Yeah. I'm giving them their due credit. So the ACA, right, and that was, they were talking about how that movie influenced and swayed public perception, of the evil HMO that just all they want to do is cost control your.
It was a picture of Kaiser on the wall, huh?
It was some inner city hospital system that was nameless, but he had to take the whole hospital hostage, and he was going to shoot himself so he could give his heart to his son. It was this big dramatic thing, and it was kind of this anti-HMO model, like you're talking about, where it was just these evil insurance companies that want to like prevent you from getting the service. And I'm like, no, that's not what it is. This is a new model that's just acting like a quarterback, getting you the health.
In theory, should be more clinically focused.
Correct.
And provide better outcomes.
Well,
right?
but the other side of it too, and I share these examples a lot. If you think about the traditional primary care doctor, right? We know we have a doctor shortage, and a lot of people don't even have a designated primary care doctor that's a traditional primary care doctor, right? So for me, my primary care doctor is my OBGYN because I'm a very healthy person. My mom's is her cardiologist because she's an unhealthy person.
Yeah.
So why are we penalizing people for having to go to their PCP to get a referral to a specialist when, in theory, if we're good consumers and we know what should be our access point and we use it appropriately, we should be rewarded for that, right?
Correct.
You would think.
Yeah, I say all the time, I'm like, when was the last time you went to a primary care doctor where you didn't already know
what was wrong with you?
95% what was wrong with you?
Yeah.
Every once in a while.
I just do blood work and then just
you're a
know.
little bit surprised. You're like, oh, I thought it was this, but it's really this type of thing. But, to that point, I think, you got to empower the consumer a little bit as well.
Yeah. And I think also from my tenure in this industry, I've seen it time and time again. Americans are bad consumers of healthcare. And I think we have to do a better job of educating them about how to use the system appropriately. Because if anything is going to help control costs, it's that, right?
Yeah. I agree. And before we run out of time, too, Sheila, talk to us a little bit about Cigna footprints, where your guys' products are today, and again, going back to methodology, approach to products, and when do brokers know usually? Is it September 31st or October
Window shopping.
30th, October
surprise.
31st. It's Halloween surprise.
Yeah.
Talk to us a little bit more about that and what to expect this year a little bit.
Yeah, so we're in 14 states today. No anticipation that that's going to change for 2025. I think if history tells us anything, expansion has to be really thoughtful and modest, right, for a lot of reasons.
Yes.
Number one, it's expensive to stand up a new market. Number two, the amount of resources we have to throw at a new market to be successful in year one is a lot to undertake. So we have to be really thoughtful about all of that. I'm not saying expansion's not on the roadmap for the future, but for now, I think we'll stay where we're at. Cigna has experienced really explosive growth, and so we are really focused on retention and really retaining the members that we have. New growth is great, but we want to make sure that our ship is ruddering the right direction.
Especially right now.
Yeah,
Well,
without people feeling that. You know?
Yeah, but with existing members too, though, claims data too.
Correct.
And so you're able to predict and forecast that more and manage it better. With new membership, you don't know, right? So
new membership is dangerous because we don't know them.
Yep.
And, the SEP last year with the Friday exit taught us a lot, right? It had an influx of members come in through fourth quarter, and most of them did renew, which was great, which we kind of expected, right? Why would you want to change just to change again?
Yeah, right.
But, our team has done a lot of work to really kind of lean into those members too, because they did come on at such an unusual time, and to really understand who they are. And that helps us tremendously.
Yeah, and I would say out of your 14 markets, you have a couple more what I would call our flagship or like legacy markets, like the Arizona, Texas, Florida. Those are very tenured.
Cigna,
like Cigna has always done very well in those particular marketplaces, correct? So if you were to say, not that Cigna's not greater, like we just acknowledge that all carrier partners have states and marketplaces that they perform better in or are more competitive in. Is there any sort of more for broad listeners markets specifically you can call attention to, highlight?
So I'll just call out for this year. I mean, you kind of hit the legacy markets for us, but we did expand in Charlotte in North Carolina this year. So that was a big investment for us. We stood up a pretty significant partnership with Navant. So getting them as our anchor partner there and then being able to cover almost the entire state of North Carolina is pretty significant if you think about it. So that's been really good. And also Tennessee, we have a pretty sizable county footprint. So those two have been really good. Our pricing is really good in Mississippi this year. But pricing is really variable. So to your other question about when we know, obviously we've been working on pricing and actuarial value of product for months at this point. Yeah. And we know probably at this point where we expect we're going to be, but we won't know for sure for probably a few more months. And the other variable why we don't always know early is because every state is different. Yes. Right? Some states are silent in their filing, so you never even know who's on the top. Some will release it early, and so you then maybe have some indication of where you might be. favorable and not favorable. But for the most part, it's when window shopping opens, when we know holistically of all 14 markets where we're going to stack up.
Yeah, and there's going to be those moments that every carrier expects, like, oh my gosh, we're going to absolutely crush it in this market and win. And also,
something crazy can happen.
Yeah.
And those other moments where you're like, oh my, like I cannot even believe that this
That's
is
not a growth market.
And the
Exactly.
and the dominoes have it's already set, like the table's set, the dominoes are going to fall, and it's going to be what it's going to be.
Yeah.
You know, it's a little crazy.
I'm curious what you guys see. I know what I see, but do you think that the premium trend is starting to level?
It's felt that way. I hope it does. For just the consistency, right? And we're more trying to educate. The biggest thing that I would say, not even premium, is we've just found so many people, from at least my experience, the biggest thing I've seen thus far, so many people who would qualify on subsidies for a silver plan, they're just stuck on the bronze plan. Mm-hmm. In general, that would be my biggest thing that I've seen. I think it's just either brokers who don't know or are lazy, sloppy. I don't know really how to I don't know really how to quantify it or the why. But so many people are on a bronze plan that really should be on a silver plan. That's one kind of challenge that I've seen. But I would say that, to your point, yes, I've seen premiums stabilize.
Yeah. Is that a education opportunity for, helping brokers understand that there's two components of price, and one is premium cost, and one is what it's going to cost that member at the time of care, or what their maximum exposure would be?
I think it is, to your point, there are a lot of newer brokers that are in the ACA space. And I think that that's something that they need to understand, a little bit more in depth, and again, have those conversations with the consumers and be able to explain that. I also think there's just like a concern about subsidies and what's going to happen next year with the Inflation Reduction Act and what happens there. And it's like, well, hey, if I put somebody on a higher, a silver plan versus a bronze, and then the subsidies get reduced, am I then going to have to just, lower them back down a tier? I think that's kind of
that's a fair point.
A concept that a lot of brokers think about too.
Yeah. From what my vantage point is, when I look at that, when I watch the buy down happening, mm-hmm. I automatically go to my old days, right? Cigna was the guinea pig for consumer-driven health plans, by the way, when they first rolled out. So I've been on a high-deductible health plan for, 17 years. I got a fat bank account. But I think that's that methodology, right? It's okay, maybe your premium costs you $5 a month, so you're all in $100 for the year. But if you buy down to a bronze plan and your out-of-pocket max is $18,000, would that bankrupt you?
For a lot of people, I mean, that'd be catastrophic.
Right. So what's the trade-off? So let's work on some training. I'll coach people.
Yeah, no, I agree. I think they need the education, right? And I do think that, to your point, with the subsidies or the enhanced subsidies, that is a big, ball of wax that
we've kicked down the road for some other future problem.
Yeah, and that's going to be kind of there's going to be a lot of finger pointing this fall. Dems and Republicans all pointing at each other and trying to figure out who's responsible for what, right? And whether they're going to renew those or not, right? Yeah. So,
and I don't know. I think we won't know until the 11th hour, mm-hmm. whether they're going to stay or go.
Right. But I think largely though, at least in talking to brokers, to consumers, and we can talk about all the problems that exist within, the marketplace right now and some of the private exchanges, but in general, it was almost like a political divide, Republicans, Democrats, but now it's widely viewed and popular amongst all voters and constituents that most people like having their subsidies and their subsidized healthcare, and that the marketplace, whether people agree, disagree, don't like Obamacare or the Affordable Care Act, now most consumers like getting subsidies and they're happy with the coverage overall.
Well, and I think most consumers like the fact that, there's no denial of acceptance based on healthcare conditions. There's definitely been some universal wins across the board, regardless of, cost effectiveness or things like that. And I'm surprised at how many people still don't know that they're better off to get an ACA plan out there.
Or the family glitch.
A lot of entrepreneurs out there. There's a lot of people that are still on, health share plans or not doing anything. And I'm like, you could get a plan for a lot more affordable than you think right now,
Yeah.
So I think there's still a lot of messaging that could be.
There's a lot of growth opportunity out there still. The addressable market, I think there's a big growth still.
Mm-hmm.
And I think you're right. I think there's a huge lack of awareness of what that looks like on the other side. I mean, I had a conversation with a young guy at the Denver Colfax Marathon a couple weeks ago, and he was like, I can't afford insurance. I'm like, yeah, you can. You want to talk to me over here?
Yeah. Did you sell them while you were running?
Yes. So let me tell you about deductibles.
Yeah, that'd be the best.
Got your phone out.
Conversation to keep you distracted while you're going.
Ask me about insurance on my bib.
Yeah.
There you go. Yeah, that'd have been awesome.
No.
No, that'd have been perfect.
Well, what else? We're kind of running out of time here a little bit, but what else should we know about Cigna? What else do you want to get out to the broker community nationwide?
I would just say, Cigna is a household name, like it or not.
I didn't know how old Cigna was until I heard your presentation this morning.
Yeah.
I didn't realize that Cigna was that old.
OG.
I have a fun fact, and remind me after, I'll show you the picture, but I was in Washington, D.C. in March, and I was at the American History Museum, and we were going through one of the sections. It was all about early voting days, right?
Uh-huh.
And so I see this case that has a top hat and something else in it, and I walked over to it, and the top hat said something, casualty, fire, and life. And then on the placard on the bottom, it said donated by Cigna Museum. And I'm like, no way. So I took a picture, and my husband was standing there, who actually worked at Cigna as well. I was like, did you see that plaque? That's so crazy. So it was literally a top hat promoting the old, basically, property and casualty company.
We should make some Cigna top hats for promotional products.
Top producers.
I'd rock one of those.
Seriously.
A top producer Cigna top hat.
Yeah, it was pretty cool. But yeah, it's been around forever. I mean, the history of the company is really quite fascinating if you think about it.
Yeah. The one thing that I would add to this too, as we're kind of wrapping and coming to end and going back to it, is I think the one thing that I've been messaging for a long time, again, for brokers, and I just did like segments talking about value in products. And, I did a little piece about, it's like a race to the bottom, that frequently we talk to brokers and they want to get somebody a 0, 0, 0, everything. And there's no value in the plan sometimes, because if it's all crappy and junky, then when the person gets that 0, 0 piece of crap sometimes and go to Access and use it, it's terrible.
Yeah.
And there's not value in the product.
Right.
And so again, I'm messaging, you need to be conscientious about the products and not only the summary of benefits that you're glancing at and the copays. It's almost like the chassis and the company that you're with and the products they're making, and what is the actual experience like when they go to have a claims and they go to use care, and the coordination and everything behind it, like going back to be an insurance agent.
Yeah.
and know that. And if all you sell is an SOB, then at the end of the day, a consumer can go online, look at numbers, and make a plan choice, and they don't need a broker.
Right.
And if you're a broker doing a good job, you're going to understand all the nuances to the different carriers and products and be able to educate them and navigate your clients through that. And so I think that that's going back to basics and fundamentals. Be a good agent, educate yourself, and educate your clients. And that's the value that a carrier should be paying you to provide that service.
Yeah. Because at the end of the day, we could build good product, we could build bad product. But if we don't pay claims well, we don't answer the phone when they call, and we don't try to make sure that they're getting the best experience possible, then we're not standing on the foundation of what we're here to do.
Perfect. I love it. That's a great clip it catchphrase for Cigna. And one final plug is, I really appreciate you coming out. For us, one of the things that really helps us decide who we want to align with and lean into are the people that we work with, right? And the caliber of the team members at these carriers. And so you're amazing. You do a great job. We really appreciate how well you did. The training was awesome. We had some really good feedback from it this morning as well. And so thank you so much for coming out and investing your time into our community.
That's what I'm here for.
Continues to be a relationship business.
Oh, yeah, that will never go away. That's why golf is important.
We'll hit it next time. Next time, I just found out you fly out too early tomorrow. But,
I do.
Next time we will book more so you can join us.
Perfect.
But honestly, it's a great relationship business. We appreciate you. You're awesome. And again, what people don't realize is your tenure and your knowledge in the industry is very valuable. So again, thank you for the partnership. We really appreciate you. And hey, like we forgot to tell people, hey, if you really like the content, the podcast, you enjoy this, I'm going to be Mr. Beast. Make sure you like, subscribe, comment, all those kinds of things. You can be a troll. You can harass us. Tell me where I'm wrong. Go for it.
Yeah, the
Don't
comments
harass
are fun.
me, though.
The comments, yeah, hit up Sheila for some golf tips.
All right. All right, we're good.
Thanks, guys.